All right, I'm down here on the floor of the New York Stock Exchange with Barbara Marcin from Gamco Fund. She runs the Gabelli Blue Chip Fund and the Gabelli Dividend Income Fund. And what do you think first about what we were hearing from Richard Reagan there? He was saying that you can't really be too excited about this rally. It doesn't necessarily have legs because of all the headwinds that you heard, for example, Ben Bernanke talking about.
I think that's true. I think we're seeing a fairly consistent story in the economy lately, and that's really of a consumer under pressure with high unemployment, weak job outlook, housing prices that have fallen in the last couple of years, and higher food and energy prices. So I think it's a mediocre outlook for consumer demand over the next year or so, and I don't think we're ahead of a consistent rally for a little while.
Is there anything Ben Bernanke or anybody can do to help the consumer out here? I mean, a lot of people have been talking about QE3, and it seems like that really helps Wall Street a little more than it helps Main Street.
Yes, that's true, and it's also a tough balance because at the same time as we borrow, that's all of our money. So we're looking out a year or two, we're saying, okay, we'll lend a little bit more now in order to goose the economy, but we're all going to pay that back in the next year or two, and that's become a big focus. So I don't think that will be helpful.
Hey guys, I want to bring in Julie right now because she's been looking into QE3. I mean, Jules, everybody's talking about QE3 or not. I mean, that's a big question out there.
Well, Bloomberg actually did a survey and found that a lot of the people we surveyed say there's not going to be a QE3. This was a survey that we did at the Bloomberg FX Summit in London last week. So it was a number of different currency professionals, but also folks who are economists. About 65% of those folks said that the second round of QE will be the last round of QE. They also talked about what's going to happen with inflation. 39% of the respondents said the end of QE2 will affect inflation. Half said there will be no effect. So, you know, as we know, Carol, here, there's been so much debate about what's going to happen next and what effect it will have on the markets. So, Barbara, I would toss this question off to you then. You know, I'm sure there's a lot of debate down there as well. What's your view on what's going to happen once QE2 ends?
Well, I can't see any QE3. You know, quantitative easing was a program put into effect for emergency purposes. You know, we can't have an economy that we try to grow it with consistent quantitative easing. So I don't think there's any appetite for QE3. You know, there is certainly a lot of desire not to see the economy fall off, especially in coming up on election year. But I can't see that there's any appetite for QE3. I can't see that at all with the administration or Congress.
Well, and regardless of whether there is a QE3 or not, your message is that the consumer here is still strapped, and it's going to be a problem going out not just this summer, but through the next year or maybe even two, right? So do you tailor your picks? Do you tailor your purchases around that?
I think so, yes. I think that you know, it's hard to make an argument for the market as a whole. I think it looks fairly valued here at about 15 times earnings with this outlook. But if you look at specific companies, there are a lot of companies that are still able to grow their top line either because they're exposed to other emerging markets or because of the industry that they're in. They have good cash generation, and they're highlighting that with acquisitions or dividends. So I think that you can. So
give us some names. I mean, what do you like? What's your favorite play here?
I really like DuPont here. DuPont just recently closed on an acquisition, a European food, enzymes, and fermentation company, which will help also with their biofuels business called Danisco. And that company will be accretive to earnings 2012 and beyond. DuPont pays more than a 3% dividend yield, and I think it's a good growth story going forward.
How much is it really about the dividends? I mean, you do run the dividend income fund, so it makes sense that you're looking at that, but a lot of people are talking more and more about getting returns that way now.
I think it is a lot about dividends. Long-term studies show that almost half of the return on your stock investments comes from dividends, and dividends really highlight a company that is able to generate cash, real earnings, and use that cash to return money to shareholders, but also to fuel acquisitions, buybacks. So I think it is about dividends.
You know, Barbara, it's great to see those dividend companies. They are a great play. We've had a lot of guests on coming and targeting that as a great investment play. But I think about the rising commodity costs that are also out there impacting a lot of these names that you like DuPont, International Paper, or Kraft. And Sheila, I know you've been looking at the rising commodity costs and the part that they're playing in a lot of these names.
Absolutely, Carol. Look, it's a trend we've been talking about all year. If you take a look at some of the commodity funds like in corn, in wheat, and in soybeans, we have seen some massive gains in each of those commodities. I mean, we're talking to the extent of 30, 40, 50% a year. Certainly, those are all inputs for a company like Kraft. Barbara, I know Kraft is one of your big picks out there. You know, Irene Rosenfeld was pretty clear in her last conference call saying that they will need to increase prices and they will start to have passing on some of these increasing commodity prices to the consumer. At a time when the consumer is already so pinched, are you concerned about that when it comes to a name like Kraft? Or as you were just saying, is it really all about the dividend and you're getting paid to wait?
No, I'm definitely concerned about input prices, and Kraft is right now managing through those, and I think has a growth driver from its acquisition of Cadbury in the last year or two. So as they cross-sell their products, I think they're starting to see higher top line, and they'll see a lot of synergies from that. But the inputs for food companies are definitely a concern.
Do you think, you say you don't think there's going to be a QE3. Ben Bernanke says he's not going to act on inflation until he sees the whites of its eyes, whatever that looks like. I mean, a lot of people, I think, out on Main Street are already seeing the whites of its eyes when they pull up to the gas pump, when they go shopping. When do we see the Fed go the other way? I mean, when do we see the Fed start to fight what we've been hearing termed as creeping inflation?
Well, I think, the way you put it with Ben Bernanke, that's right. Until he sees it broadly reflected in core CPI or core pricing, he's not going to admit it's inflation, even though for consumers, food and energy are a large part of expenses, of course.
He probably doesn't fill up his car himself or do the grocery shopping.
I don't know. I think it's very difficult for him to admit to inflation right now with him trying to keep the economy going. So perhaps that's part of it, too.
Barbara and Matt, I'm wondering what investors are waiting for, because we know investors are sitting on a lot of cash. I mean, Adam, you've been looking at this. I mean, there's a lot of cash that investors are kind of holding on the side right now. Yeah, well, Bank of America Merrill Lynch just did a survey, and the conclusions are pretty astounding. Let me show you cash levels in May. 6% of the 828 hedge funds surveyed, cash levels in May, 6%. In other words, they're overweight. You look at just what's happened in the past few weeks, that's effectively tripled. It's gone up to 18%. In other words, 18% of the hedge funds say, wait a minute, we don't like what we're seeing. We're going to raise cash. We're going overweight cash. So, Barbara, my question to you is, where do you fall? Are you raising cash? Do you not like what you see? Are you selling on a day like today?
No, I think it's very difficult to time the market and to determine whether you're ahead of a 6 or 7% correction, which we've seen twice this year now. I think it's very difficult to tell that. And as far as the cash goes, I will just say that as a longer-term positive, eventually there is lots of cash in the United States, both held by individuals and by corporations. And once people feel that excessive regulations are at an end and they can see, what the next 12 to 24 months looks like, then capital will be deployed and we'll resume a growth path.
When are we going to see excessive regulations come to an end? Do you really hold your breath for that?
Yes, I'm expecting that within the next couple of years, we will have basically come to terms with all the massive regulations that were put into effect in the last year or two, and I think companies and individuals will feel more comfortable making purchases and investments.
Adam, I heard you shouting out there.
You just asked the question of the day. When do we get comfort? That was exactly what I was going to ask, Matt.
I mean, you do have people wanting to overturn these things. Is that what you expect to happen? You've got so many bank lobbyists up there, obviously trying to get rid of things like debit card fees. Obviously, the healthcare overhaul has been on the subject of every op-ed page for the last couple of years. Do you really expect these things to get turned around?
Well, I think that some of the regulations were really were perhaps too much. I think what everyone needs is to be able to look at the next year or two and say, I see the lay of the land. So I don't think overturning will help. I think that we should just perhaps accept what it is. If we don't get any more new regulations in the next year or two, I think that'll be positive.
All right, just get things solidified. Barbara, thanks so much for joining us. Really appreciate it. Barbara Marcin here from Gamco Investors. Carol, back up to you in the studio.
Thank you, Matt.